India. There's different types of contamination that could happen, but what I've been focusing on for the past year.
Welcome back. It's the wedding season in India, and that means everyone's pulled out their best dresses and gotten all decked up. Adding to the glitter is the jewelry, and that's where Titan comes in. Tanishq, the country's largest organized player, will be hoping to make the most of this season, especially since it's not been the best of times for jewelers in the country. So is it turning around to be a big fat wedding season? Let's ask the CFO of Titan, Mr. S Subramaniam. Mr. Subramaniam, thanks very much for joining in, and let me kickstart this conversation with that as to how the wedding season is shaping up. And you had guided for jewelry growth of about 25 to 30% in Q3 FY19. Is it likely to meet that target or beat it, considering how the wedding season is shaping up?
I think we have a good wedding season. We've had post Diwali, it's been quite good. The traction has been good. I think it's been helped by slightly stronger rupee compared to the months before that. And generally, I think we've been having good traction. Sales on a daily basis have been quite decent, pretty much in line with our internal targets. So that's the good news. And it's pretty much, I mean, it's over as of now. The wedding season is actually over. The next 15 days will be a little low because up to I think mid-Jan, but otherwise I think Q3 has been quite good.
So would we
in terms of growth, I think you mentioned 25%. That I think was the figure we were looking for the whole year. So this quarter I think we should be actually quite good. Yeah.
Will you give us a ballpark? Will you meet that 25%?
I'm not going to give you a number now. It's not right to give you a number right now. But I think the growth should be quite good, yes.
Right. So this time around, sir, if you can highlight for us, much of the contribution has come in from same-store sales. The expectation was that you would see a beat in that, where contributions have been about 60% from SSSG. This time around, it will be slightly higher, about 70 to 75%. Has that been the case?
Yeah, it is. Actually, most of our growth will be same-store growth. Between 75 to 80% of the total growth that we show in any quarter or period would actually have to come from same-store. So if we look at, say, 20% growth, between 15 to 16 at least should come because of same-store growth. And that's how this has been panning out every quarter. So I don't see that as an exception now as well.
Okay, so two follow-ups are there, Mr. Subramaniam. This is Neeraj here. Good morning. Firstly, without getting into numbers again, but would a strong showing in Q3 help you very easily meet or probably beat your year-end targets because of a little bit of apprehension that could have been there for how Q4 would turn out?
I think we'll take it one step at a time. Q3 has been quite decent. So it gives us reasonable hope that Q4 will not be very different from this, at least as of now. Gold prices, if they are soft, demand does tend to pick up. So it's been quite, as I said, decent across this quarter. And therefore one is hoping Q4 also will be good. But we'll take it one step at a time.
Okay, so we'll probably talk to you one step at a time as well. Maybe the next quarter we'll talk about Q4. The other follow-up is you speaking about how the same-store sale growth would essentially drive numbers. So one, I'm guessing that is margin accretive, and therefore would you believe your operational metrics would look a lot better at the end of the year than what they would have at the start of the year? And part two of my question out there too, despite you betting on same-store sales growth, I think you've charted out fairly interesting initiatives for better jewelry growth in terms of expanding into 100 more towns, opening up more stores as well. Is that the next leg of growth for 2019?
Yeah, that would be the case. Now, coming to the margin, I would assume, yes, the margins for the quarter, this quarter and the next one as well should be better than what it was in the first half. We mentioned that as well earlier, and that's largely because we had a lot of ad spends in the first half in the jewelry business. It was the opposite as far as the watch division is concerned, but as far as jewelry is concerned, you would start seeing margins getting better because of the top line growth. The operating leverage should kick in. And as far as the additions are concerned of stores in the next year, yes, we are planning about 40 stores this year, and we hope to achieve that target. And as of now, we're looking at least another 40 stores next year as well. So we are going a little aggressive as far as network expansion is concerned. We think there is significant opportunity. We've talked about going to 100 new towns in the next 5 years, from the 250 or so, 150 or so that we are present in now. So I think that looks possible, and we are gunning for it.
Right, so that being one of the factors to drive growth in the jewelry segment, the other factors and how does each of these variables play out for you, if you could highlight the same for us, whether or not increasing the share of wedding jewelry in the overall jewelry segment from 30% to 50%, and that's what's being factored in now, your gold harvest, gold exchange, how is all of that individually shaping up and in a way contributing to the overall growth target for the jewelry segment?
I think all of them are panning out as we are hoping. These are goals that we have set for ourselves in the next 5 years, 2023, the 30 to 50 and all that. As of now, I don't think we are seeing any risk to any of these levers delivering us that. Golden Harvest has been doing well. Exchange program has been very, very successful for us. We've used it both strategically and tactically every now and then to ensure that sales are as per our plans, internal plans. The jewelry segment itself, we have more than 90 stores today which cater to the entire wedding market out of the 270 that we have, and this will expand over the years. Similarly, the focus on high value studded jewelry also is playing out quite well. The average ticket size itself in the last couple of years has gone up from 65 to about close to 80,000 now. So it's all panning out the way we are planning. So it's good, and we just need to execute.
Mr. Subramaniam, the other buckets, I know Raji wanted to talk about jewelry and wedding jewelry and how that is shaping up because that's the lion's share. A couple of other pointers, one on the eyewear business, and what's working for real estate seems to be working for eyewear too. Lower average sales price and maybe that finding higher buying. The question only is it overall revenue, top line, margin accretive strategy as well, and will it show up with a J-curve effect over the course of the next 12 to 18 months?
Well, as far as eyewear is concerned, I think our main goal there is to ensure that the top line growth is good, okay, and something like a 20% plus growth is what we are aiming for. We are frankly not aiming at profitability at this stage. We could be profitable if we just have to cut down on the ad spends, but we believe we want to strengthen the brand further and take the growth as much as we can. And therefore, this year and the next, most probably, we will be investing a little disproportionately in advertising expenditure. The idea is that we grow our top line significantly. Some of the factors which are also going to help there could be the frame distribution that we've started this year. So we have a frame manufacturing facility. We are looking at distribution as well. So these are the things that we want to actually engage in the next 3-4 quarters. So I think the focus, as I said, is going to be on growth rather than profitability. Profitability will automatically happen once growth is sets in. Yeah.
That's very interesting, and at the same time, higher same-store sales growth in watches, or rather in jewelry, would probably help the overall margins as well. Just one last question that I have on that, Mr. Subramaniam. Again, I understand you can't speak about a lot of numbers, but with cost escalations going up quite strongly, I believe your staff costs are increasing by about 10% at least, if not more. Would that remain an overhang? I'm not asking you about watches too much because I believe you've said in your conversations with brokerages that you yourself are uncertain or unclear about whether this resurgence in watches will sustain. So we'll leave that out. Just one last question on the staff costs and how that will shape up over the next 12 months and impact profitability.
Staff cost of 10% is almost a standard in India. I think if you look at every year when we do our planning, we look at what the market is planning for the next year. 10% generally is in that ballpark. So what we are doing is no exception to that rule. The average pay hike, or rather average employee cost increase, would be in that ballpark anyway. So I don't believe that's an area of concern. Obviously, it means that we need to do better on the top line to get our growth and therefore improve our EBIT margins. So the focus is actually therefore to get the top line growing as much as we can.
Yeah, Mr. Subramaniam, sorry, just a small follow-up to that, and that will be the last question. The reason why I asked you that question was there are a couple of notes that we read, and my analyst Agam telling us as well that with costs looking the way they are, 10% standard yes, rentals doing 5% standard yes, your SSSG needs to be minimum above 10% for your margins not to get impacted. I'm guessing you are sanguine on all of those counts.
Oh yes, we are. Because if we are targeting 20% plus growth in the jewelry segment, then these won't matter, right? At worst, the cost increase would be between 7 to 10% overall, and therefore your operating margin should actually improve. Yeah.
Okay, fair call. I understand can't talk too many numbers more, but we look forward to talking to you post your earnings. Thank you so much though for joining us and giving us a lowdown on how the wedding season is shaping up for you, and all the best for more. That's Titan, and a bullish Titan, I must say, on the impact that the wedding season has had on Q3 and thereby what it could do for the year as a whole. 934 and counting on Titan. The market's lying absolutely soft, 0.5% lower. It's a wrap on this leg of today's Indian Open. But up next is the FNO show. Stay tuned to Bloomberg Live.